In the chaotic world of crypto, trust is a currency more valuable than Bitcoin itself. It's fragile, built on dreams, and shattered in an instant. But once there was a man who convinced the entire world he could make digital money safe again. His name was Sam Bankman-Fried, and for a while, everyone believed him. Sam was born into privilege, the son of two Stanford law professors. He wasn't your typical rebel or a hustler from the streets. He was a thinker, the kind of kid who could see 10 moves ahead on a chessboard that others didn't even know existed. At MIT, he studied physics, but it wasn't atoms that fascinated him. It was systems, how money moved, how markets behaved, how pure, cold logic could outsmart raw human emotion. In 2014, while most of his classmates were chasing jobs at Google or Goldman Sachs, Sam took a different path. He joined a small, secretive trading firm called Jane Street Capital, renowned for its quantitative trading strategies. It was there he mastered the art of moving millions in milliseconds, learning how algorithms, arbitrage, and mathematics could quietly shape the world's financial heartbeat. He wasn't just trading, he was learning the language of the market itself. By 2017, the crypto world was exploding. Bitcoin had just surged past the $10,000 mark, and for a generation disillusioned by traditional banks, it felt like the dawn of financial freedom. While everyone else saw hype and volatility, Sam saw something different: inefficiency. He noticed that Bitcoin prices in Japan were sometimes 10% higher than in the US. This wasn't magic. It was a massive, untapped opportunity. So he founded Alameda Research. The name sounded like a harmless biotech startup, but it was actually a small, razor-sharp crypto hedge fund run by a group of brilliant math nerds. Their mission was simple but incredibly effective: exploit those tiny price gaps between countries. They would buy Bitcoin cheap in one place and sell it high in another. This strategy, known as the kimchi premium, worked like a charm. In just a few months, they were making millions. But for Sam, making millions wasn't the end goal. He didn't just want to play the game, he wanted to own the entire casino. He saw that the existing crypto exchanges were clunky, unreliable, and often crashed during peak trading times. He knew he could build something better, something faster, something for the pros. In 2019, Sam launched FTX, short for Futures Exchange. This wasn't a platform for beginners dipping their toes into crypto. It was a sophisticated arena built for serious traders who lived and breathed leverage, the ones who wanted to bet not just on prices going up, but on volatility, speed, and the very fabric of market chaos. FTX offered complex financial products that other exchanges wouldn't touch, like tokenized stocks and prediction markets. It was a trader's paradise, and Sam was its king. What made FTX feel so different, so trustworthy? It was Sam himself. He wasn't some anonymous figure hiding behind a screen. He was everywhere. He was on podcasts and magazines and speaking at conferences, dressed in his now famous uniform of a t-shirt and cargo shorts. He spoke with a quiet confidence that was disarming. He talked about effective altruism, the idea of making billions of dollars just to give it all away to charity. He wasn't just building an exchange, he was building a narrative. A story of a selfless genius who was here to fix crypto and maybe, just maybe, save the world. He became the friendly face of a dangerous industry. While other crypto founders were mysterious and reclusive, Sam was accessible. He played League of Legends during interviews and slept on a beanbag in the office. He cultivated an image of being just a regular, slightly nerdy guy who happened to be a financial prodigy. He wasn't just a CEO. He was a character, a hero in the crypto saga. He bailed out failing crypto companies, earning him the nickname the JP Morgan of crypto. He was seen as the lender of last resort, the responsible adult in a room full of gamblers. And the world bought it. Investors, celebrities, and regulators all lined up to endorse him. Tom Brady, Gisele Bündchen, and Steph Curry all became FTX ambassadors. The company's name was plastered on the Miami Heat's basketball arena and on Formula One cars. FTX wasn't just a crypto company anymore. It was a cultural phenomenon. It felt safe. It felt legitimate. It felt like the future. Behind the scenes, the engine was running hotter than anyone could imagine. Alameda Research, Sam's trading firm, was FTX's biggest customer. This created a massive, unspoken conflict of interest. It was as if the owner of the casino was also its biggest gambler, playing with chips borrowed from the house. But on the surface, everything looked perfect. The company was valued at an astonishing $32 billion. Sam, not yet 30, was one of the richest people on the planet. He had convinced everyone that he had built an impenetrable fortress of finance. But in the world of crypto, fortresses can be built on sand. And as we now know, a storm was brewing just over the horizon. The very systems that Sam had mastered were about to turn against him, and the trust he had so carefully constructed was about to be tested in the most dramatic way possible. The man who wanted to own the casino was about to find out what happens when the house of cards comes crashing down.
FTX offered features no one else dared to touch: instant margin trading, advanced derivatives, and seamless global access. And it worked beautifully. By 2020, daily trading volume had hit billions, celebrities endorsed it, venture capital flooded in. FTX ads painted Sam as the Warren Buffett of crypto. He wore shorts and a t-shirt on stage, soft-spoken, messy hair, the image of humble genius. To the media, he was the good billionaire, the one who wanted to give his money away through a philosophy called effective altruism, the belief that wealth is meaningless unless it helps the world. In interviews, he promised to donate almost everything he earned, and Wall Street loved it. They saw a man who could finally bring legitimacy to crypto, a bridge between chaos and capitalism. By 2021, FTX wasn't just another exchange, it was a movement. They bought the naming rights to the Miami Heat Stadium, now called the FTX Arena. They ran Super Bowl ads starring Larry David and Tom Brady. They built an image of safety, innovation, and moral purpose wrapped in a logo that promised, "You can trust us." Even the most cautious investors fell under the spell. The Ontario Teachers' Pension Fund, SoftBank, Sequoia Capital, they all wrote checks billions of dollars worth, because Sam wasn't just selling crypto, he was selling belief. Behind his unkempt hair and awkward interviews, he seemed pure. He didn't talk like a CEO, he didn't flaunt wealth or power. He spoke about math, ethics, and saving humanity, and that made him untouchable. At his peak, FTX was valued at $32 billion. Sam's net worth soared past $20 billion. He was on the cover of Forbes, Fortune, and hailed as the next JP Morgan. And yet, in the shadows of that empire, a storm was brewing. A storm hidden behind code, spreadsheets, and the quiet connection between two companies, FTX and Alameda Research, because while the world saw Sam as a genius, no one knew how fragile the empire truly was. Every empire, no matter how brilliant, hides its secrets. For FTX, that secret lived in the shadows in a trading firm called Alameda Research. To the public, Alameda and FTX were separate. In reality, they were one heartbeat, connected by invisible wires of money, trust, and control, all running through one man, Sam Bankman-Fried. Inside Alameda, risk was a language. It was a small office in Hong Kong filled with math prodigies and restless ambition. They traded day and night, using borrowed tokens, speculative bets, and margin that reached deep into the billions. But there was one problem. While FTX grew into a global exchange, Alameda was losing its edge. The arbitrage game that once printed millions had dried up. Competition was fierce. The market was slowing, and Alameda's risky bets began to bleed. To fix it, Sam made a fateful decision, one that would destroy everything he built. He allowed Alameda to borrow from FC's customer funds. In theory, those funds were sacred, locked, and untouchable. In practice, they became a hidden lifeline. Billions of dollars flowed quietly from FTX accounts into Alameda's black box. And with it, Sam created the illusion of stability, a perfect trading empire, backed by the money of the very people who trusted him most. To hide the trail, developers built a secret line of code, a backdoor that allowed Alameda to withdraw money without triggering FC's accounting systems. No one at the company knew, not the engineers, not the investors, not even the risk managers who thought everything was clean. By 2022, Alameda owed FTX over $8 billion, but on paper, everything still looked fine. Auditors saw billions in assets, venture capitalists saw exponential growth, and the world still believed. Then came the crypto winter. Bitcoin crashed, prices collapsed. and investors started to ask questions they should have asked years ago. Where was the money? Who controlled it? And what was really backing FC's token, the EFT? The EFT token was FC's secret weapon and its ticking time bomb. FTX had printed billions worth of its own token, then used it as collateral to borrow real money. It was as if a bank printed its own currency, then claimed it was gold. As long as no one sold it, the illusion held, but once doubt entered the market, that illusion shattered fast. On November 2, 2022, the truth began to leak. A report from CoinDesk revealed that most of Alameda's balance sheet was built on EFT, a token created by FTX itself. In one headline, the empire's secret was out. Confidence cracked, whispers turned into panic, and then the spark. Changpeng Zhao, CEO of Binance, the world's largest crypto exchange, tweeted that Binance would sell all its EFT holdings due to recent revelations. It was only a few words, but in the crypto world, words can kill. Within hours, billions of dollars rushed out of FTX. Customers withdrew everything they could. The exchange that once looked unstoppable was suddenly facing a bank run. Inside the FTX offices, chaos erupted. Withdrawal requests flooded the system, balances didn't match. Some employees realized for the first time that the company simply didn't have enough money to pay its users. Sam tried to calm the storm. He tweeted that FTX assets are fine. He told investors there was nothing to fear, but behind the scenes, the truth was clear. FTX was out of cash. In less than 48 hours, the empire of trust was collapsing under its own lies. Alameda was insolvent. FTX had an $8 billion hole in its balance sheet, and Wall Street, the same institutions that had once called Sam the next Warren Buffett, began erasing his name from their websites overnight. For years, he had built a company on the idea of doing good, of earning to give, but now the world saw something else: a web of deception, a betrayal of trust, and a reminder that even in the age of crypto, human greed still rules the game. As the walls of FTX closed in, Sam had one last move to play. He reached out to his biggest rival, the man who had just sparked the run, Binance, and he begged for a deal. What happened next would shock the entire world and end one of the most spectacular rises and falls in financial history. On November 7, 2022, Sam Bankman-Fried was still tweeting, "FTX is fine," he wrote. "Assets are fine, but nothing was fine." Behind those words, an $8 billion black hole was consuming his empire from within. In the blink of an eye, confidence, the currency that powered FTX, vanished. Investors withdrew, partners froze their deals, and for the first time, even his closest allies began to doubt him. As liquidity evaporated, Sam turned to the one man who could save him: Changpeng Zhao, the CEO of Binance. For years, the two had been both partners and rivals. Binance was an early investor in FTX, but later they split, competing for dominance in a world that had no room for two kings. Now, Sam was asking his enemy for help. He proposed a full acquisition. Binance would buy FTX, take over its assets, and rescue the customers. For a moment, it looked like a miracle. The markets calmed, crypto prices rebounded. Sam tweeted again, "Things are coming together," but the calm lasted less than a day. When Binance's due diligence team opened FC's books, what they found was chaos. No structure, no internal accounting, billions missing, and a secret loan funneling customer money to Alameda Research. Within hours, Binance walked away. Their public statement was brutal. "The issues are beyond our control or ability to help." That was the moment the empire truly died. Overnight, FTX went from the world's second largest crypto exchange to a company that couldn't pay its users a single cent. Employees fled, lawyers quit, regulators in the US, Japan, and the Bahamas launched investigations, and Sam, the man once hailed as the JP Morgan of crypto, was suddenly under criminal suspicion. Inside his penthouse in Nassau, the Bahamas, Sam barely slept. He paced. He called investors. He begged for capital. He told the world he could still fix it, but there was nothing left to fix. On November 11, 2022, FTX officially filed for Chapter 11 bankruptcy. More than 130 related companies followed. Sam Bankman-Fried resigned as CEO, and the headlines around the world all said the same thing. The crypto king has fallen. What followed was pure chaos. Hundreds of thousands of users locked out of their accounts. Millions of life savings vanished. Charities, startups, and pension funds lost everything. And yet, in the middle of this storm, Sam stayed online. He kept tweeting long, cryptic threads, half explanations, half confessions. He did interviews from his luxury penthouse, claiming he never intended fraud. To some, he sounded sincere, to others, delusional. Journalists flooded the Bahamas. The once mysterious founder became the world's most wanted man in finance. A few weeks later, the U.S. Department of Justice filed criminal charges: wire fraud, securities fraud, money laundering, and conspiracy. It was the largest financial indictment since Enron, and this time, the defendant wasn't a banker or a hedge fund titan. He was a 30-year-old crypto prodigy who claimed he only wanted to make the world a better place. Sam was arrested on December 12, 2022, by Bahamian authorities at the request of the U.S. government. His messy hair, handcuffed wrists became the final symbol of a broken dream. As the investigation unfolded, the truth was worse than anyone imagined. Executives admitted that FTX customer funds had been used to buy luxury real estate, political influence, and risky trades through Alameda. There were no internal controls, no board oversight, just one young man surrounded by believers, playing God with billions. For years, Sam had spoken of effective altruism, the idea of earning to give. He said he wanted to make billions only to save lives, to fight global poverty, to do good. But in the end, the question remained: was it a noble dream twisted by power or just a lie wrapped in good intentions? In 2023, as he stood in court, Sam pleaded not guilty. His lawyers argued he made mistakes, not crimes, but to the millions who lost everything, it didn't matter. FTX had become a symbol, a warning that even in the new digital frontier, greed, arrogance, and illusion never change. For crypto believers, it was the end of innocence. For Wall Street, it was a reminder. Every revolution eventually meets reality. And for Sam Bankman-Fried, the boy genius who built an empire of trust, it was the day he finally faced the cost of breaking it. When an empire falls, it doesn't vanish overnight. It leaves echoes in courtrooms, in headlines, and in the hearts of those who once believed. For months after FTX collapsed, the world tried to make sense of it. How did a company valued at $32 billion disappear in a week? How did a man who spoke about ethics and charity become the face of deceit? And more importantly, how could so many have been fooled? In early 2023, investigators began to untangle the wreckage. What they found was a maze of shell companies, hidden loans, and reckless decisions. Customer deposits had been moved like private chips on a casino table, funding Alameda's losses, real estate for executives, and even political donations across Washington. FTX wasn't just mismanaged, it was a house of mirrors, every reflection showing success, while behind it, the walls were crumbling. When the new CEO, John J. Ray III, took over to manage the bankruptcy, he said he had never seen such a complete failure of corporate controls, coming from the man who had cleaned up Enron, that said everything. As the hearings began, the crypto world went silent. Dozens of companies that had relied on FTX's stability suddenly faced collapse. Venture firms wrote down billions in losses. Ordinary investors, teachers, students, retirees discovered their savings were gone forever. The shockwaves reached far beyond the digital realm. Regulators tightened their grip. Congress demanded answers. And for the first time, Wall Street looked at crypto not as innovation but as risk. Meanwhile, Sam Bankman-Fried awaited trial. He was released on a $250 million bond, living in his parents' home in Palo Alto, the same place where he once dreamed of saving the world. He spent his days writing emails, reading legal briefs, and occasionally tweeting about mistakes. To his followers, he remained oddly human, anxious, awkward, sometimes still idealistic. To his critics, he was a manipulator who refused to face reality. In late 2023, the verdict finally came. After weeks of testimony from former FTX and Alameda executives, including his closest allies who had turned against him, Sam was found guilty on all counts: fraud, conspiracy, and money laundering. He now faces decades in prison. The boy genius who once promised to build a better world had become a warning to it. But the story of FTX isn't just about one man. It's about a culture, a generation that wanted to move fast, break things, and trust math over morality. Crypto was supposed to be the future, transparent, decentralized, untouchable. Yet it fell to the same human weaknesses that have doomed every financial empire since the beginning of time: greed, hubris, and the illusion of safety. After FTX, billions fled the crypto markets. Bitcoin lost over 70% of its value from its peak. Thousands of small tokens vanished. The word trust, once printed on every exchange's homepage, became almost taboo. But in the ashes, something else began to grow. Developers started focusing again on transparency, on proof of reserves, real audits, open ledgers. Regulators around the world began drafting laws that would finally bring crypto closer to the world it once tried to replace. And slowly, investors began to return, not for speculation, but for something more stable, more grounded. Maybe, just maybe, the collapse of FTX became the painful reset crypto needed. As for Sam Bankman-Fried, history will remember him in many ways. To some, he was a fraud, a manipulator who exploited idealism for personal gain. To others, he was a tragic figure, a young man who believed he could outsmart human nature and failed. But one truth remains: in finance, as in life, trust takes years to build and seconds to destroy. And when that trust is gone, even billions can't buy it back. The FTX collapse wasn't just the end of a company. It was the end of an illusion that technology alone could replace integrity. In the ruins of that illusion, Wall Street, investors, and dreamers alike were forced to face the oldest lesson in the book: there is no such thing as easy money. This was the rise and fall of Sam Bankman-Fried, a story of genius and greed, of belief and betrayal, of an empire that built itself on trust and drowned in it. Wall Street legends. The FTX collapse: empires don't fall because of money, they fall because of misplaced faith.
The story of Sam Bankman-Fried is more than just a tale of financial collapse. It is a warning about the seductive power of a good story and the catastrophic danger of believing in saviors. Stay tuned as we unravel the stunning downfall of the crypto king. Thanks for watching. If you found this story as fascinating as we did, make sure to hit that like button and subscribe to our channel for more deep dives into the stories that are shaping our world. We'll see you in the next one.